node across the system. In the case of a public open source blockchain, this information is made available for everyone to see in full transparency. Now, in summary, the on-chain analysis provides crypto traders with a fascinating tool to delve into real-time insights of a blockchain network. This gives them the opportunity to capitalize on the advantages offered by a more data-abundant and transparent crypto market. Now, the on-chain data, guys, includes the information for occurred transactions of a certain blockchain network, or put differently, all information recorded and stored on the blocks of the blockchain. Now, this data can reflect the information regarding the health of the network, the buyers and sellers behavior, and data helpful in the crypto asset valuation. Now, the health of the network, guys, can be assessed through metrics, uh, through monetary integrity metrics, actually, like the total circulating supply and daily issuance of coins. Through network security metrics, like the miner's hash rate and miner's revenue, and through network usage metrics, like active addresses and transaction count. Now, I'm not expecting you to remember all of those things. We'll have a look, of course, on some examples that you can, of course, find on your own pace. Now, buyers and sellers behavior. This helps investors identify Bitcoin price inefficiencies. For example, it can be assessed through metrics like the reserve risk, dormancy and dormancy flow, supply and profit and loss, realized capitalization and thermal capitalization, as well as hold waves and the realized hold ratio. And the asset valuation can be conducted by evaluating cost basis metrics such as the market value to realized value, the market value to thermal value ratio, investors capitalization ratio, and QL multiple ratio. Now, in addition to the cost basis metrics, the profit and loss metrics such as realized profits to value and seller exhaustion constant aid in the asset valuation process. Now, among the various metrics available, we'll focus on some important ones and uh, popular metrics that provide actionable signals for the traders, which one of them is the reserve risk metric. Now, first of all, before we begin, you can find all of these metrics on the Glassnode website, our on-chain provider. Have a look on their website. There is an explanation, of course, of the metrics, and actually there are some free tools and some paid ones. Have a look on their metrics and let me know, guys, your thoughts. So, reserve risk as our first example. This is a cyclical indicator that tracks the risk to reward balance relative to the confidence and conviction of the long-term holders. Now, it provides a long-term cyclical oscillator that models the ratio between the current price that is incented to sell and the confidence or conviction of the long-term investors. Now, the reserve risk is low when holders' conviction is high and the price is low. Thus, there is an attractive risk to reward to invest. Now, the reserve risk is high when holders' conviction is low and the price is high. Thus, the risk to reward is unattractive at that time. So, by observing the chart, we can see that the price bottoms out once the reserve risk enters its undervalued zone below 0.003, which is the green box now, and the market peaks when the reserve risk reaches its overvalued zone above 0.02, the red box. Now, here we have the orange line as the reserve risk and this gray line, the price of Bitcoin. So here we can see that the reserve risk reach this undervalued area below 0.03, the green box over here. In this case, there is an attractive risk to reward to invest. So as you can see from the price as well, the price is at its lowest point back then in 2015. Alright, so it's a good historical buy zone. So if you bought, this signal over here and you bought Bitcoin, of course, was around, I don't know, 1000, shooting higher at 2018. As you can see, the reserve risk reached its overvalued area above 0.02, the red box over here. So the price of Bitcoin was at its highest point. What that means? It means we definitely stop buying and we can look for some potential selling opportunities. And the same happening 2019, another good historical buy zone, and 2020 two bottoms actually over here, good historical buy zones, and of course the market moves higher. But as you can see, guys, it's not these signals are not very suitable for scalpers or intraday traders. As you can see, it may take a lot of time to develop from 2015 to 3 years later to 2018, 19, and 20, right? It takes some time to develop. Now, the next one, another actionable metrics is the dormancy flow. Now, dormancy describes the average number of days each coin transacted remain dormant or unmoved. Now, the entity-adjusted dormancy flow is the ratio of the current market capitalization and the annualized dormancy value that is measured in US dollars. Now, this ratio helps identify historical global lows and assess whether the bull market remains in relatively normal conditions. Now, whenever network value remains high relative to the yearly moving average of its realized dormancy in US dollars, the bull market can be considered as healthy, since price remains high relative to the market's annualized spending behavior. Whenever dormancy value overtakes market capitalization at lowest longitudinal levels, the market can be considered in full capitulation. This is a good historical buy zone. Now, orange line, you can see entity adjusted dormancy flow, price of Bitcoin, this gray line. So two things going on. If the this metric goes in the buy zone, this green box, of course, the price should be at its lowest point. So good historical buy zones. And we have also the bull bear threshold, this line over here. If the metric is above that level, the market can be considered as healthy. The bull market can be considered as healthy. So 2015 historical buy zone, the same as the previous metric, and at around over here 2018, as you can see, the metric broke below this threshold is when we could take some profits out of the market and potentially looking for selling opportunities. Now, the same signals happened over the previous metric. We'll see, of course, the next metrics have the same signals as well. So you could use multiple of these metrics to have a better and more valid signal. Now, next one, realized capitalization. So while market capitalization aggregates the value of all coins in the circulation at current prices, the realized capitalization is their average cost basis, valuing each coin at the price at which it was last moved, the price it was last acquired at, as opposed to its current value. Now, realized cap discounts long dormant or lost coins as they can be considered of low economic value and weights coins according to their actual presence in the economy of a given chain. Now, when a coin that was last moved at significantly cheaper prices is spent, it will revalue the coins to the current price and thus increase realized cap by a corresponding amount. Similarly, if a coin is spent at prices lower than it was last moved, it will revalue to cheaper prices and have a corresponding decrease in the realized cap. Now, given realized cap values of each coin at the time they were last moved, it can be considered as a proxy for the value stored or saved in the asset. And whenever the market cap drops below the realized cap, the overall market can be considered to be selling at a loss, suggesting capitulation. Now, a period of time when the market cap traded below realized cap represented ultimate bear market bottoms and accumulation ranges, and where the realized cap acted as both resistance and then support once the level was breached. Now, in this metric, guys, we have the realized cap in this yellow line, and in blue, the market capitalization. So, when the market cap dropped below the realized cap, actually, overall, a good historical buy zone to watch for some signals to enter the market to go long. The same happened with 2019 and 2020. So again, the same historical signals to go long as the previous metrics. But as I said before, it takes a lot of time to be developed. Now, QL multiple, another great metric. So QL multiple examines the fundamentals of mining profitability and the way they shape market cycles. Now, it's calculated by dividing the daily issuance value of bitcoins in dollars, where the 365-day moving average of daily issuance value. Now, during bullish markets, the incentive for mining increases, and with it, the incentive for miners to sell some of their coins. In these instances, the QL multiple will be trending higher